Okay, guys, I'm back with you now again. AB Investments. Just have to have my espresso, and I did bring back my hookah friend. Um, you know, double apple as always. Um, anyways, again, this is this is the second video to what we were talking about in the first video. Now, here's the important part. If you look, while the SEC meeting was happening, the volatility was really high and majority for the upside. But what does that tell me? If you've been around for a whole year over and over in these plays, you should have already seen this happen numerous amount of times, almost around whatever meeting, whether the Fed meeting, the SEC meeting, anytime we anticipate something to happen for the overall good of of our well of our interests. This happened exactly just like this. So great news, great everything, but again, we do not know when the rules are going to be implemented. They're talking about 30 to possibly, I've heard Gensler in the meeting talking about 60 days, but again, nothing has been officially kind of confirmed. So later on today, I might come back to you, or maybe by tomorrow, to tell you exactly when it gets posted on the Federal Register. So if it's 60 days or 30 days, then I can without giving you any financial advice, tell you that by this Friday, you're gonna see like very, very red days. Specifically tomorrow, you're gonna see like a 10, probably 10-15% drop, which it erases yesterday's 10% and today's 8-9%, which again also goes back to last week when I said the way that I gauge personally how the squeezes up on us is through the price action and specifically how the covering is happening. If it's just a small mere 8-9% from where we dropped, um, if there is any again, I don't rule anything out, but if there is any covering, it's literally like the smallest and smallest of hedge funds. So those hedge funds just can get out of the way. Kind of more like for us, where we don't want paper hands into our play, because paper hands, we feel like they would hurt the movement on the upside when the squeeze is up on us. Same thing with hedge funds. The small, weaker, not as liquid hedge funds are equivalent to those paper hands on our side, So those guys can be the ones leaving because the price was just so low right now, dropped for them. This is an exit strategy for them. Like, this is a perfect place to get out for them. And if that's not the case, then obviously they're just gauging and playing around the sentiment that was set up from last week, the hype train that booked all its tickets last week, and it's on its way this week, and it literally is happening exactly as I was mentioning in my previous videos from last week. It's playing out exactly the same. And it's funny thing is that it's not like I'm some sort of psychic or guru. Um, I use those specific percentages, that this was how it most likely would go down, because those percentages are very easily controlled, and you can see how the price action is being controlled by those algorithms, which is probably not something new that you probably heard it from other YouTubers, but those percentages and what I've said, no one have said. No one is talking about that, because everyone is either selling you an agenda of hype, or some others are selling you conspiracies, or others are selling you, the idea on just kind of going along with what's happening. They will quote other Twitter accounts and other YouTube accounts and other stuff like that. So at the end of the day, what I'm trying to say is that most have their own agendas to why they're doing it, or what they're doing this for at YouTube and those other YouTubers. Honestly, I'm gonna say that I mean, I'm not, again, I don't know anybody's heart and what is going on in everybody's hearts, but from what I've seen, it's been all nothing but personal agendas for each person that's on there. Like, maybe honestly, the most straightforward people out there on this whole matter are, to me, are Lou and yeah, I know a lot of people have trust in him and a lot of people don't, but I personally, honestly, like watching the guy. Doesn't matter what his role is. I think that he has helped the community more than he hurted it, like for a long time. And then the second one was he's a newer guy as well. His name is the Common Sense Investor. I like how real he is. I mean, he keep it real. He'll tell you, I'm just doing this for, like, for the greater good of the investors. And he's also trying to get monetized for his YouTube channel to get his check. And you can't hate on the guy for that, because at the end of the day, it is time. So that's where they both, him and Lou, kind of go into each other, because Lou doesn't support that idea of Tupperwares and cups, as he mentions, and then the Common Sense Investor is not even thinking about that agenda. He's just more real. So the more real person out of both, I think, is the Common Sense Investor. And I would send my gratitude and salutes to both of them. The rest, I feel like they have just like strict agendas of whatever, you can see through their YouTube channels what they're trying to push, for them. Anyways, this video is not about that. I'm not trying to, get on anybody's case. I'm just trying to push what's really important right now. Forget the people and all that stuff. So now you see houses like Sundial, AMC, BBIG, meme stocks in general, GameStop, are moving. Literally after that meeting, you see that they are consolidating and on the downside. And look at those option chains of how they even loaded up more on the strike price that's just like literally right above that, like a dollar amount of where we at. So for example, Sundial, it's about that 0.5%. Sorry, I had to take a break, Puff. So at that 50%, by the way, guys, again, I don't promote smoking or anything. This is bad for you. It could cause cancer. So smoke at your own risk. So you have Sundial at that 50-cent strike price, and the break even is somewhere around the 58 to 50, between 55 and 58, 0.58, 0.55, depending on what area you bought in, that strike price, when it was down. So as you can see, the amounts of calls have increased versus the ones from yesterday. They were lessening throughout the intraday. I would say about the midday when it was moving, and then it dropped a little bit toward the end of the day. So why is this like kind of a difference? Because what happened is, if you notice, look at the timeline here. Forget the charts, guys, for a while, because the times that we're in, the charts are important to know how to read. It's a good science. It's a good education. It's good to know, obviously, because if you're going to be a successful trader down the line, especially a day trader, you need to know that stuff. But it does not apply in today's circumstances. Why? Because none of this matters right now. It's all different, because you're talking about there's so many synthetics. Like, the charts operate when everything is perfect, So kind of like when it's like the ethics work when you play against a team that does not cheat, that does not do anything wrong, and the playing field is even. Where we all know that the playing field is not even. So after the IEX system gets implemented, aka Robot Godzilla, then we would know. Then I would urge the need to understand the chart analysis and all that stuff. So, but for now, it makes no difference. Just look at the timelines and look at the other pictures, the things that are happening at the same time. Moves are happening within your stock. So yesterday, when the contracts were going down after the price was going up, and then when the price was going down, you saw that the contract amounts were getting less. And then at that very same time, throughout until almost the end of the business day, that's when the cryptos that were dropping 6, 7, 8%, Bitcoin 4, 5%, and all that stuff started going back up. So again, I've said this throughout the whole channel so far, every day and almost in every video. This goes up, that goes down. That goes down, this goes up. And the reason why is because money is being taken from here and then put in here, and then money is taken away from here. Profits, basically, are collected from here and put in here. Hence, that way they don't lose their major positions in the crypto market, because they don't want it to drop below certain prices so that other factors or other institutes or retail investors jump in, or those points where a bottom, like I've mentioned in other videos, there's many of the traders, whether institutional or retail, they have like trigger points where they have orders, whether sell orders or buy orders at trigger points, and majority of them revolve around 52-week highs and lows. So if once it hits that 52 low, or whether a little bit above it or on it or right under it, a lot of these orders will just automatically trigger in. They're just set up to automatically go in on that, and hedge funds do not want that to happen, because then they will have a kind of a squeeze effect on from both ends, you know, from the crypto sector and from the stock market sector. For a moment, I'm kind of getting ahead of myself. See, this is calming and relaxing, and it helps you collect your thoughts. So anyways, yeah. So today, you saw that the market was going up, and somehow, obviously, the crypto was just staying flat. Like literally, it was just like consolidating the whole day for the like entire, since like the pre-market. It's just been at the same amounts. 1% up, 0.5% down, 1%, 0.5% up, not even 1% down. And that the reason why is because they didn't take out most of their positions. All they did from yesterday till today was just take out their profits from the crypto. That's why it went down a little bit from the 3% or 2% move that it went up. And they're using that to get that 100% utilization, whether on AMC, on other things, to load up contracts and things like that. So I'm not ruling out. In fact, I'm literally going to say, and fact check me on this, by the end of the day today, you're going to see that the prices will close around, like, if since AMC's high today was 1872 or 1870, I actually predict that it will break the $18 mark. It will be at the 19 somewhere, like maybe $19. I would say anywhere around the late 18s. So like it will rebound from where it went down after the SEC meeting to 18 something. It's like at 1770 or 1780, and now it's rebounding. I think by the end of closing day, by 4, you'll see it at 19 something, 1910, 1908, maybe 19, I would say 1903, or the upper $18. So breaking that 1870 mark. What that does is that gives them the time to go ahead at the closing minutes. You're going to see it, you know, start beginning the sentiment of dropping. And then in the aftermarket, you're going to see I don't want to say a nice, but a drop come down. I'm going to end this right here so I don't make it too long. I'll make a third video. All right, guys?